Hello, hello, hello. Happy Monday morning, December 11th. How is everyone doing today? Thank you for tuning in. As always, good morning, Patrick. Good morning, Sterling. That's so funny. The Bank of Japan. Sustainable inflation. Oh, they're going to leave negative rates. That's why it's bouncing back after the last week's rout. But we shall see how that ends up. Good morning, Jacob. Good morning, Royal Palms. Good morning, Pavneet. Thank you for tuning in. We'll take a look at the dollar in a little bit. So, big week ahead of us. Good morning, Options 22. Where are you now located, Options 22? Good morning, Connor. Uh, Let's see. I mean, we got a big week ahead. Good morning, Richard. Good morning, Tone. Anissa. Good morning, Tony. Again, thank you, everybody. Busy Monday morning. More and more people. Hey, Charles. How are you this morning? All right. Today, pretty quiet. We got the consumer inflation expectations, the 3-year notes, 6-month bills, 10-year notes. So a lot of auctions today. Watch for any tail events there. Other than that, it's really tomorrow. We got CPI. CPI 7:30 Central Time, so an hour before the cash open. And Wednesday we have FOMC meeting and we have PPI, CPI, PPI, FOMC, and even if they pause, it's going to be interesting. The most important thing is the press conference, 30 minutes after rate decision at 1:30 Central, 2:30 Eastern. Thursday, we have jobless claims as always, in retail inventories, business inventories, and then Friday we have S&P Global Manufacturing, Composite and Services. So really, I mean, the biggest day is going to be, well, tomorrow and Wednesday are the biggest 2 days of this week. I'm glad to hear everything's good. All right, so we'll have to see. We have weekly cycles at the top. We get a lot of reversals at Fed meetings. So far this morning, the chips are all up. The mega caps are pretty much down besides Tesla. Costco earnings this week. We'll take a look at what earnings. This is a very light earnings week, but we got Oracle, we've got Tesla, we got Adobe. Groups, we got comm services down, healthcare up. So might be a slight rotation into some consumer defensive. And we can see consumer defensive rolling out of some comm services stuff. Fed watch going into the meeting still has everything priced for a pause. We used to have a cut in March, and now that's a pause in March and the first cut in May. And remember, we were getting down to 4 to 4.25. Now it's 4.25 to 4.5. So not as many cuts priced in for next year. By the way, new futures edge with me on it dropped this morning. So check that out if you have not already. Fear and greed still solidly in greed mode. So, yeah, we'll do the percent B. It's going to be probably right before Christmas. Probably right before Christmas time. I'll figure that out. Or, as I said, Oracle after the close is a big one today. Not really much tomorrow. Wednesday is Adobe after the close. And then Thursday is Costco after the close. So that's the biggest things I'm keeping an eye on that week, but not much. Earnings season has wound down. Going into it, we have weekly cycles. Just pay attention because we're into a potential big shifting area. We broke out above the most recent highs. We have some pretty major divergences up here. So and we've gone on what, a 1, 2, 3, 4, 5, 6 week run, which is without even a really strong pause in here. I mean, we had a little sideways pause in here on the daily. Then we had the contract roll. Remember, Friday, some people will be rolling early this week also. I am paying attention to Friday's high. We break out above there. If we break out above there, if we use this short-term little harmonics from this air pause, we really get 46.81, and then the major cluster 46.97 to 4700. So those are the remaining upside targets going into early this week. Other than that, if we run up into the open or like post open, I'm going to see if we make a little 4-hour double top, or as you can see it, even a 1 hour. 1 hour little double, and that's only to reverse this move over here. I'm going to be keeping an eye on that and see if we really come back down over the next day to retest the 46.40, 46.35 area. We start breaking below about 46.33 with momentum or a negative tick. Next thing down is about 46.15, and then right around 4600 are the immediate downside targets. So keep an eye on that. Daily cycles could continue to run up into the Fed meeting on Wednesday afternoon. Also remember, the rotation zone is right around this 4600 to reconnect with the daily rotation zone after the last little push higher. There is a fair amount of waning momentum on this last push higher, so I'm more leaning, at least this week, into more pullback / consolidation pattern. NASDAQ, same thing. Daily cycles still running up. Weekly cycles pinned to the top. We got waning momentum and potential divergences also. You still see here a 6-week run up. But what are the levels? Should we break above Friday's high? We have 16,405 and 16,481. Then what do we have? We have about 550, 540. So that's where we sit today. You can see the RSI, the pretty big waning momentum and divergences. We start, same thing here. I think this has already come up enough. So it's a little sloppy right here with the lows being, no, it hasn't come up enough. So this has to push up above about 16,311 to really form a little double going into the open. So if we get any of that push up, that's what I'm watching for. First level support, separate from the double targets, is about 16,205 to 16,200. We break below there. I'm watching closer to 16,1 with momentum if we get momentum to the downside. So that's where we sit there. The Dow, are we going to eke out new all-time highs? 36,832 is the key level. 36,832. So that is any target if we take out Friday's highs. Other than that, the pullback area is about 36.5 and then 36.3 to 36.350. Same thing with the cycles on the Dow. Russell, this is getting a little sloppy, but it's really sloppy, actually. But I'm just going to put the targets on here. Should we get the reversal move, I'll fine-tune them if we know that this side's in. But we could easily see the breakdown, back to the lower end of this channel if we get a close below 1845.60. To the upside, you're still looking at key resistance 1895, then 1900 are the upside targets in that. Russell still weekly against the 200 area. Against the 200 area, we technically got the close above the 62.5, but I'm starting to watch for at least some pullback here. It's gone on a waning momentum with that close, so I'd be watching for that pullback, but unless it does trigger that horribly sloppy double, would still err possibly inside of a sideways correction unless a double's triggered. Thank you, Connor. This is historically the worst week in December. Well, we shall see if that holds up. The housing market is so tough that divorced couples are living together. And that's not a joke, I guess. That's Wall Street Journal headline. You can't move. You're trapped. You're trapped in the same house together. VIX still same levels as last week, 1330, then 1430. Uh, that price actually, it was major sell vol on Friday. Sell vol. I mean, this is just, boy, sell vol, buy, uh, really mega caps. But that's what I'm watching for the reverse there. The DAX, we have no more potential double. So key target is still 16,850 area. Watching for a potential breakdown play, but support is coming in at 16.7, the minor support, and major support coming in about 16.6. Also, you got waning momentum here with daily cycles rolling over and daily cycles heading down and weekly cycles rolling over. And this has been on an absolute tear. The major support still coming in at the prior significant highs, 16,550. I'd be in trailing mode on the DAX if you're still long the DAX personally. That's what I'd be looking at. The note futures, this is just a mess right now. I'll be watching if we do get a little bounce in here for then another rollover play. But the major support right now is coming in at 109.31 roughly. It's more interesting with we had the percent B buy follow through at the close in the micro yields with a little follow through would be aggressively moving up a stop here, but that's where it sits, and we will be revealing some of the percent B buy rules. Next target is 4.32, 4.33 on the upside. But again, this would not let this percent B buy on a break from Thursday's high turn into a loser. No steepening still, holding around the minus 45 basis point lows. So no steepening again, no bear steepening. Dollar index. Is this an inverse head and shoulders? It would have to be done. This is going to have to be done. We still have a little potential double top, but if it does break above here, this with the modified flat neckline rules can be traded with the targets. So yes, this can be traded with the targets with the modified flat neckline rules. It's confirmed but not triggered. It needs still a close really above about 103.80. What was the highest close here? 103.79, just missed it there. So 103.80 is the key level. To trigger it, that'd be 104.70, 105.14, 105.58. So, and by the way, for this one, if this were to eke out a close and then close back below this low of 102.86, I would definitely be using a tighter stop. And for the people who know, this would be a walk away trend line too. So a close below this, especially the defining point of this trend line would be invalidate this this inverse head and shoulder, sorry. Still a Monday morning. So that's the thing. So it's got potential signals either way. Potential signals, but I'm leaning towards we might get a pause little there on the daily, but the weeklies are turning up. So this could start another dollar run. Crude, we had the little mini double. It's pretty much done. So to carry on with crude, we're doing the first test of the rotation zone. I'm watching potentially for some backfill price action to make a stronger bottom. And then I'll be paying attention to about the 72 area for any more bullish move. Weekly cycles at the bottom. And look at this. 1, 2, 3, 4, 5, 6, 7. 7 weeks down against the weekly 200. This is a critical area. I talked about this on the podcast, so tune into that. But this is a critical support area for crude. So I'm now watching for a more significant bottoming formation coming in. For gold, we're at daily cycle bottoms. Weeklies, we're still at the top, but I'm watching for this key level of support to hold in here potentially. Right around this 2000 area, 1997 to 2000, and then a potential reversal signal to the upside. We'll have to see if that does hold. We don't have it yet, unless it got a major rally and closed above Friday's high, or we set up another %B buy today. So, Connor with the stats. Yep, I mean, order flow is trumping macro definitely right now. Order flow is trumping macro. So keep an eye on gold, but this is not a strong pattern yet. The yen bouncing back with they might not change the negative rate policy because they don't see inflation taking hold, but so far the bounce back. This was the sell-off that the thoughts were they were going to change. They were going to go to positive rates, and now it's bouncing back. But it's still got some heavy lifting to do. Heavy lifting to do in the yen. I'm going to be watching for a pullback and then to see how that reacts there. Not much with the euro. This is a mess. Unless it breaks below this 107.20 area, then I'll be looking for a quick return to the 62.5 area. And that's also would be if the dollar broke out higher, the euro weakening. The pound, still we have the final target lower. I'd really be using just a 200 for a reconnect with the pound. Other than that, not much. The spiders, the gap down this morning. So the spiders also, which was nice because remember in the roll times right now, I like to use either the cash or the spiders and the Qs because it gives a little better information. We still have a massive divergence on the spiders. First target today would be 460.20 to the upside, and then a break above that 461.22. And if it continues through tomorrow, 462.93 are the targets to the upside. The support levels. The support levels 458.90 to 459. Below that is coming in at 458 to 458.10. And the major support coming in at 456. The Qs. Let me take a look at the. No, that's going to be interesting, though. The Qs tapping off that 87.5. So right now, 391.82. The first thing would be the minor gap fill to 392.17, then 392.71 as still using the harmonics from these pullbacks, and then right around 393.65 to about 394. A break above 394.14, 395.58. On a sell-off, very key support coming in about 390.30, and then 389.85 to about 390. So that 389.85 to 390.30 is a very key support area. What the heck's going on with Natty Gas? Not much. Failed breakout and reversal. Failed breakout and reversal coming in to the low area again. So would nothing yet from the bullish side again. Would not be aggressively shorting this, but nothing from the bullish side. Tesla still in consolidation. Nothing's changed. Breakdown area 232, breakout area 245.50. Other than that, it's in no man's land. Nvidia, we had the % B buy on Tuesday. Stop below the low is the technical stop for that. There is an alternative stop, but we'll cover that in the percent beat buy rules. But the stronger stop is below the low. Came back down, bounced up on Thursday, back up on Friday. So from a trailing perspective, the key areas hit that 50%, but this is where it starts trailing. Now the key area is the 484.50 area. 484.50 is the next key area, and this is now, worst case, a break-even stop. Worst case. So what else do we have going on? Apple, still watching to see if we reconnect with the final target of the double top, and we filled the gap finally. So that's all done. I mean, the double bottom, double top. What was I saying? What was I saying? But that's about it. Key support in Apple 192. So keep an eye if that breaks below. Oracle, earnings today. Earnings today, just not a lot of great patterns right here. Not a lot of great patterns. Closing right at that 62.5 and then rejected from there. So not much with the Oracle setups. Yeah, hit the like buttons. Other than that, there's it's the fireworks start tomorrow morning with CPI and PPI on Wednesday and Fed meeting. So, I'm just going to be watching the price action, but for me, especially for anything that's been from a long position, would be in, again, trailing mode, would not be aggressively setting up any new positions from the long side. Anything would be intraday only, especially with the waning momentum and cycles at the top. So I am not personally in anything aggressive mode to the bullish side. Does not mean there might not be a setup, but I would not be looking for can it still keep marching on? Sure, but even when Connor put in the stats, with especially after a 6-week run, cycles at the top, waning momentum, I got to play the probabilities, which at least is a dude for a pause. XOP triggered the weekly double top on Friday. Yep, XOP triggered it. So this could be more rollover moves to the downside there on any rallies. Key resistance now 135 to 135.25. Hey, Christoph, how you doing? Advanced options question here. It's too early for that on a Monday. If you had a delta neutral trade on like an iron condor, at what delta range do you adjust to get back to neutral? Well, it also depends on how it gets there. That's not just an easy question to answer. It depends. I look at the deltas, okay, but I also look at where it's trading against key support and resistance within the sub patterns to look at if it's going to adjust. Because if it's but I don't really want most of it getting above 50 deltas or below minus 50 deltas, worst case. So I generally look to adjust stuff as it's coming into key support or resistance within that condor pattern. All right, we got a couple minutes to open. Let me just peek at your that's not a simple question on a Monday morning. Sterling. It's a good question. That's like more of a 30-minute potential discussion. Going in the S&P 46, 52, 50, 53, and 46, 62 are the range on the open. Really keep an eye on the tick today. We need an advanced class, yeah, but not at 8:30 a.m. on a Monday. No. Thank you, everyone, for tuning in. I will be back tomorrow. Just don't do anything silly going into Fed and PPI. Yeah, we're not going to go in deep on that one, Mike. We need. Yeah, we're not. I mean, I need like six more of these cups filled. Oh, look, it's got my name on it. Uh, yeah, I need like six more of those before we start doing that. So, everyone, have a wonderful trading day, and I will see you all back in the chair tomorrow morning. Bye for now.